Mark is going to the new bottom. Jerry Gidel is going to tell you if that's going to happen right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So Jerry, we had new USDA numbers. You had your own estimates prior to the report, and what do you think? How do you think that has impacted the market?
Well, the USDA had kind of a dichotomy going on here between their wheat numbers and their U.S. Corn and soybean numbers. We're just getting, the plantings probably over 50% now this week on both corn and beans and that. But the wheat number today, this week, I should say, is definitely less wheat around than anticipated. They had a little, they reduced those to harvested area and took the yield down pretty significantly here nationwide. And so the total production number was about 100 million less than expected. Interestingly, part of it, of course, is hard red. In the Southwest, with Kansas only having 190 million estimate for that. Texas number seemed a little high to me, but and Oklahoma was kind of on target. But the other part of the equation is that the Pacific Northwest estimates, which is where the white wheat's at, and it's a wheat that doesn't really get involved a lot in the U.S. discussions, and that it came in lower than expected, and actually lower than some contacts I had out there told me that they or anticipated what it would be. So overall, the numbers in wheat definitely set the wheat market on a positive response, jumped right out of the chute there, and actually moved up to the $9 mark basis July in quick order. The corn numbers and soybean numbers, though, did not have the same reactions or have the same direction, I should say, as much as the wheat did. In the old crop corn numbers at this point, I was anticipating about a 50 million decline. It came in on 75 million on the USDA's estimate of corn exports after the cancellations we've had recently by the Chinese. As they seem to be very sophisticated purchasers, being able to buy Brazilian corn at a lower price point. I understand that's a possibility. The biggest problem is that they're not going to be at the front of the line on the shipments here, since they at this point. So we'll see how that all works out for them. But that increase in old crop stocks in the corn market, along with the USDA, and it's not unusual for them to go ahead and utilize the trend yield they come up with for the Ag Outlook meeting back in February, and the same thing on soybeans at 181.5 on corn and 52 on beans. But then they just utilized their latest spring planning intentions in that. So those numbers didn't surprise me, even if I'm one of these people that's still very reluctant about utilizing a 181.5 bushel yield as a trend. I think that could be a high side of the number, but I don't sense that that's really logical, that there could be something substantially higher than 181.5. So anyway, and also the USDA was conservative on their export situation for next year. Ultimately, that turned out to be a 2.2 billion carryover stock, and that's definitely substantially higher than the 1.4 they're talking about this year. And so that definitely put the corn on the defensive. The only reason I think it hung together and stayed slightly higher was the fact that wheat was so significantly higher, and also the likelihood of any kind of U.S. wheat feeding this summer is very, very low. It's going to have to be soft red. It's going to have to be railed into the plains from the east, because it sure isn't going to be hard red. That's too valuable a wheat at this point for our wheat. From there, so for our bread, I should say, on that. So at this point, at least, I'd say that there may be just a little bit conservative on some of their expectations on demand here for corn in the new crop. But that's early, and that's what's going on. Same kind of thing occurred over in the soybeans here on the latest USDA numbers, primarily because we ended up having no particular advancement there in crop exports. I kind of felt they might say that increased slightly here from the previous month, but our overall trend is a little behind that. I think the other feature that's kind of got lost in here is that the previous stocks report suggested that maybe the USDA's numbers for last year were overestimated, but that's not going to come back around until the June numbers at this point. So, but with no tightening of old crop carryover stocks, and that the USDA went ahead and had a pretty impressive number. Previously the USDA was looking at about a 290. They came up with a 335 million number because they dipped down exports down to below 2 billion pace. I think that's probably a little conservative, but that's not unusual. That USDA never wants to project too high a number on exports until they actually see the shipments start coming along. So with these carryover stocks in both corn and soybeans higher than, and particularly over the psychology of a number of 300 million on soybeans and 2 billion on corn, they definitely in the defensive. Actually, beans is the one that closed lower, while corn did get a little influence of that wheat number as it stayed unchanged to higher, and some of its numbers by the close.
Yes, and over the week we had several developments. We had CONAB in Brazil increasing the soybean crop numbers. Also in Argentina, some of the exchanges keeping the soybean numbers. And we had some reports of dry weather in the state of Kansas. So giving all that, do you think that the soybean market has reached a bottom, or there's still room to go lower?
Well, the soybean market's pretty interesting in the fact that, and you pointed out there that the USDA left their Argentine corn and soybean numbers unchanged at 27 million for beans and 37 million for corn, which is highly unusual considering the kind of reports that we have had from both the exchanges. They went ahead this last week before the report and actually tightened up their bean estimates down into the 21.5 to 22 million number. That's 5 million under the USDA's. And on the corn number, they had numbers below at 34, 33 million versus USDA previously. And so when the USDA didn't make those changes, that was I don't know. I scratched my head on that one, to say the least, from that standpoint. From the standpoint that the issues there, this warranted some type of slightly lower numbers, since they didn't make any changes in that, and particularly with the reports on beans at this time on harvest down in Argentina being 50 to 55% completed. I think that the implications of the smaller crop was probably pretty obvious down there at that kind of harvested level, but the USDA was reluctant, I guess, to make those changes. And I think that's part of the reason why we had some pretty significant higher U.S. carryover stocks for the coming year. And the same thing to some extent in their world numbers that they issued on both of those. I think that to some extent, that's a factor that could come in here. The biggest problem we've got right now in both, and the soybeans particularly, is at this point that the prospects of any kind of planting time would rally because of issues in South America, and that probably has been neutralized at this point. So I guess I'm a little cautious about the fact that we could see some slippage in the soybean prices as we go into later this month and on into early June, because unfortunately, right now there's getting less and less things to get excited about on world supply demand on beans, and so and there's some of the situation on corn. I've been anticipating a chance to see some kind of a new, further excitement out of South America, and the USDA didn't provide it this time.
Yes, but from the demand side, at least for corn, even though we are not seeing an increase in demand from China for corn, we are seeing an increased demand for meat, especially we see that on the hog exports from the United States and Brazil.
Yes, yeah, well, I think that it's an interesting twist that they can look at either side of this thing. Their domestic prices haven't. They had a little burst after the COVID restrictions were taken off, and that in a big way. But I'm not sure there's something domestically that the buyers over there are not excited about their own product, or just what. But the domestic prices have not really provided a big opportunity for profits feeding pork over there. So I think that's part of the twist here. But in the same logic, I think that there is still some expanding demand for meat as more and more people are out in the business, in the public type situations, and everything's starting to get back towards a somewhat normal situation. It's never going to be totally normal after this whole COVID issue, but it.
So what do you expect for next week?
Well, ended up this coming week, we're still going to be battling ideas about the U.S. wheat crop. The one thing that's kind of ironic is that we're finally getting some pretty sizable rains potentially here in the Southwest, and even up in the western areas of the northern plains, where most of the wheat crop is grown in spring wheat. So to some extent, I think the markets are on the wheat side at least might be on the sluggish order. The corn and soybean situations, as I mentioned earlier here, were in a situation where inadequate supplies and maybe oversupply situations because of the USDA's optimism about 2023 crops and that. So I'm anticipating some sluggishness yet to continue next week, and maybe even to slip the corn and soybeans below this kind of recent supports we've had in the Julys here at in the 1350, 1375 zone here at this point. From there, in my post analysis here for some other people, I went ahead and recommended selling 10% more of our old crop corn and beans here at these levels, primarily because they're taking advantage of the good basis levels that are now out there, and that leaves just some gambling amounts there of 10% to take on into what's going to potentially be the things look like as we enter the summer period out there on that. On the wheat, by the way, this rally that did occur yesterday, on Friday, I should say, turned out that it hit my $9 value for Kansas City. So that did end up increasing my wheat sales 25%. And that's kind of combining together remaining supplies of last year and expectations for this year for producers, primarily because we've been really ignoring some of the issues in wheat in the U.S. And looking at the longer term situation, not the issues in the U.S. But overall, with the wheat sales popping up to the $9 level, probably that's where I had a 25% sales level for the combined remaining supplies people had for last year in their upcoming new crop. And I think that's really going to take advantage of that, particularly too with some of the basis levels that are out there. I'm not sure that we could still have a big influence in things happening as we go through, because I'm not sure we're at the lowest level we're going to see on U.S. winter wheat. And whatever the issues we might have. Right now, the world numbers from the USDA are anticipating the production number to be similar to last year. And I guess I'm very cautious about that number. U.S. is not going to really be anything spectacular. Australia is not likely to end up having a wheat crop anywhere close to their 38, 39 million metric ton crop they had this year. Is El Nino definitely is a big factor in that country's output. And it's still on the agenda for that part of the world. And then the Russian crop isn't likely to be there. And one of the things that we still are struggling with in the wheat market is will the Black Sea corridor stay open? Back and forth, there's negotiations this last week. The Turkish representatives were very optimistic about it being extended 2 months, similar to the original 120 days that it was done. But at this point, we haven't seen anything officially from the Russians, and they're still wanting all their situations taken care of on so-called financial and insurance issues and that on shipments. So right now, at least that one, if the Ukrainian situation gets shut off, that definitely would be a factor and could generate some more excitement in the markets. But right now, at least that's still not decided and will be important as we go forward here. But right now, at least the market's kind of getting beat up here this last week, and they're kind of on the edge. So I'd anticipate at least a choppy scenario and maybe some downward pressure here as the U.S. corn planting season it comes to an end here in the next 2 or 3 weeks.
All right. Thank you very much.
You bet. So have to splice this together here.